Hello and welcome back to KD's Business Tips. Michael Lapide here to talk to you about rental properties and reporting rental income both for businesses and individuals. First of all, rental property is generally a building, of course, that you have leasehold interest in where people are renting it. Now, it could be short-term rentals, it could be long-term rentals. It is still a rental where you own it and someone's renting it from you. Now, this could also be commercial, right? Obviously. Rental income is income you earn from renting the property, right? That's the rental income. And at the end of the day, you might not own the property yourself. You might have 2 partners, 3 partners. You and your spouse might own it. That's okay. It's still rental income in the proportionate share that you have it. So if you own 25%, then 25% of that rental income is claimable by you, okay? Rental income includes income from rental houses, apartments, rooms, spaces, office buildings, commercial, any movable properties, right? Anything. You could be renting out a trailer for all that matters. Rental income can be either income from property or business. So we can have rental income from a property, or we can also have rental income inside our business. So if we record it in our business, yes, there's certain schedules, but we're really reporting on the business tax return. If we report it personally, we're reporting on the personal tax return as rental income. Now, you get to write off all your expenses in most cases. Now, there are some rules around that. In most cases, you're going to write off things like mortgage interest, property tax, utilities, insurance, repairs and maintenance, and so forth. So you're going to deduct all that. Now, not mortgage principal, but mortgage interest, but you're going to deduct all these expenses, and you're only going to pay tax on the net profit. Now, if it's inside a corporation, you might pay tax at a little higher rate, unless we can turn that into active income, because that's passive income. Individual, you're going to pay tax at whatever your rate of bracket is, your tax bracket, the net income after expenses, okay? And the last thing I'll mention too, it's important to note that rental income is taxed much different than business income. And there is a certain point where your business, if it earned enough and had enough people working for you, say you had 6, 7 employees, then that passive rental income inside your business, inside your corporation, could be considered active income once it gets to a certain point. Now, you might also pay management fees. That's a direct expense. And whoever claims that income on that side is active income. So there are points where that passive income inside of a business turns into active income, and typically that's once you're past 5 employees, you're greater than 5 staff or team members, maybe contractor employees that are working full-time for the business to manage all the properties. Okay. Any questions, we'd love to hear from you. It is a complex topic, that's just the basics. But thanks again for being a part of our Business Tips.